Hello, and welcome to another video in our GreenieRE series on impact insurance and the climate. I'm Amy Antczak from Energetic Capital, and today I'm talking to Michael Kalnas, underwriter at kWh Analytics. Michael, thanks so much for joining us. Can you tell us a little bit about yourself?
Thanks for having me, Amy. Yeah, nice to see you again. I am an underwriter at kWh Analytics, where I specialize in using insurance to support renewable energy projects, either on the property insurance side or on mitigating risk through production guarantees, which I think we'll get into later today. I've been at kWh for about 2 years now. Previously was at MUFG, large Japanese lender, who has a very strong presence in the renewable space in the US. So been excited about renewables for a while and excited about what we're doing here today with GreenieRE.
Um, So, Michael, as you know, in this series, we are exploring different types of credit enhancements and insurance offerings that mitigate the risk of renewable energy projects. Can you tell us a little bit about kWh Analytics and how they fit into that ecosystem?
Yeah, absolutely. So kWh fits into the ecosystem of renewable energy in really by bringing carriers into the space. So, as a managing general agent, we partner with insurance carriers and allow them to deploy their balance sheet towards projects in ways that we bring about with our data driven approach. So, KWH originally started out as a data company. For the first about 7 years of its existence, we had a software offering that allowed major investors in renewables to better track and compare and predict the outcomes of their renewable investments. These are big, unwieldy portfolios, and our idea was to come in, make it easy. Someone asks you how a project here or there or with what type of equipment it's doing. We started out being the only name in town that could help them sort through that data. Through that process, we collected a lot of data, and then it became an issue of finding out what can we do with it. We knew that when you get up to 30% of the U.S. operating fleet in your data set, there's got to be some value there. So what we've done is we've partnered with insurance companies and helped them bring their capital to the space. We do that in two ways. One is with our production guarantee that we have a number of carriers supporting, and our property insurance program, which is protecting renewable projects from typical natural catastrophes, as well as attritional losses. And that's backed by our lead carrier, Aspen Re.
Great. And how did KWH decide to transition from being a data company to an insurance company? What was the rationale behind getting into the insurance business?
Yeah, I think it was a bit of a supply and demand side, Amy. So we had all this data. We went through down a couple different rabbit holes trying to figure out how to best use it to support the industry. Insurance became the correct answer as we started to realize, how valuable it can be to have those really data-driven decision making and risk forecasting for the industry, as well as the demand side. So from both carriers, who at that time largely lacked a way to have a really good approach and unique understanding to renewables. There were carriers that happened to do renewables, but not really renewables focused carriers. So we wanted to help get the industry smarter about that risk. So we saw a need from carriers to get access to data like that we had. But additionally, the industry needed more insurance capacity. The last few years, property insurance in particular has been a dramatically rising cost. We just heard a sponsor last week talk about how property insurance went up to the number two cost on their list. So when it's at this level, when it's becoming a matter for not just asset management teams, but also at the C-suite level, that's a ripe area to come in and try to be innovative. So we've been able to bring new capacity, new balance sheet into the industry to support these renewable projects, and we've been very happy about the impact and the reception we've had as a new entrant to the space.
Yeah, that's wonderful. Now, I'm so curious about your solar revenue put product. Who's the typical kWh customer for that product, and why do they need it?
Yeah, so that product, it's purchased by the developer of the project, typically the long-term owner, who is concerned about the long-term production, the ability of a project to produce as much electricity as you have in your forecast. But the motivating factor is going to be on the lending side. So typically, all of these projects have some amount of debt, and the downside scenarios that those lenders contemplate, do due diligence against, are the type of scenarios that we look to mitigate with our production coverage. So the best type of transactions for us, the ones that get us excited, are these binary decision-making processes where we can come in and it's a sponsor who can't otherwise execute on the structure that they currently have, and we help get lenders comfortable knowing that this substantial amount of risk is being mitigated, is being outsourced to the insurance industry, and allow those developers to get capital where otherwise they may have had to give up on developing a project.
Right. So would you say that providing your investment grade insurance product has allowed solar developers to obtain financing for projects that probably otherwise would have been deemed too risky?
Absolutely, absolutely, Amy. And we've done that a number of different times. Sometimes we can help make a project financially viable if the lender provides an explicit benefit to the sponsor for using us. So either that can be higher amounts of debt or lower interest, but very often we'll see lenders provide more of an intrinsic requirement for our coverage,
Mm,
where they're going point blank to the sponsor and saying, "Hey, uh, we're having issues with our credit committee. We aren't comfortable with the amount of risk. We need to do something here to make this project viable and make it work for us." And often, we're the pinch hitter there, and we can come in and help outsource a substantial amount of the risk of a deal to the insurance market, and do that in a very efficient way with our data-driven, largely automated approach.
that's wonderful. We love to hear about risk transfer that's allowing renewable projects to move forward. So I'd love to hear more about how the product works in the world. Do you have a success story that you could share with us about demonstrating how the solar revenue put has actually made an impact for a particular client?
Absolutely. So I'm happy to talk about our good friends at Enterprise Community Development, ECD. That is the development arm of the larger enterprise organization. Enterprise as a whole is one of the largest. I believe they're the sixth largest nonprofit affordable housing developer. Last we looked, they had over 23,000 residents
Oh, wow.
spread out across the U.S. So very substantial real estate portfolio. They know their business well, and they're very mission driven. These people really care about their residents, and through that vein, they were looking to bring the benefits of renewable power to their residents. They wanted them to be able to participate in the green transition. They wanted to reduce the environmental footprint and the cost savings that they expected to bring about, and to pass those cost savings on to their residents. So while they have a great experience developing real estate, securing debt against real estate, securing financing for real estate, doing solar development was a bit of a new game for ECD. And so we were able to come in and help get their counterparties comfortable with the risk of solar development. Really, not just their counterparties, their lenders, who it was crucial for, but even ECD. They were making a long-term commitment to solar as a program, and they didn't want that commitment to be dependent on the ability to always hit certain levels of production. They didn't want it to be dependent on their ability to very accurately forecast how their sites were going to produce. And frankly, it was nice to be involved because we were able to help on those fronts as well, by providing some support on forecasting, the same forecasting we use to underwrite the insurance that helped support their development.
That's so wonderful how you were able to help with the bringing the so many benefits of solar to lower income communities who, like you said, have mostly been locked out of the green transition. I'm curious, do all the banks that lend against solar projects require coverage for production risk? Is this something that you're seeing all the time?
No, no, not all banks. There are a number of large commercial and investment banks that have been able to develop very strong renewable lending practices. We have a lot of those banks that we work with regularly, and those lenders are comfortable. A lot of them are comfortable taking production risk. They have a lot of expertise and in-house teams that they've built up to do that. They'll We'll still work with them, but that's more of like the explicit benefit group we work with. But unfortunately, you need a lot of business to support developing a very specialized renewables team. And I think even more so today that human capital is one of the biggest constraints of the renewable transition. We talk to a lot of lenders who are hopeful to start their own renewable lending practice, and they're not there yet. It's not just a few folks. It takes a team of experts to really get comfortable putting capital behind these transactions. So unfortunately, the large, more established players in the space that are capable of underwriting these deals often won't engage with a sponsor on the scale of ECD.
Mm,
They have higher costs, and they also have not a community motivation, community focus that a lot of the smaller lenders they typically work with have. So our goal and the role that our coverage has played has been to help open up renewables and investing in renewables for these lenders that otherwise wouldn't be able to get comfortable taking on that risk. And ECD is a great success story where we were able to do that. They have a go-to lender, their almost sister company, Enterprise Community Loan Fund, who had never lent against material amount portfolio of renewables before. And we were able to help make that binary decision, get them comfortable, outsource not just some of the risk to the insurance market, but also some of the due diligence that comes behind it, allowing this lender to get comfortable doing renewables that otherwise wasn't looking to make that big leap and build out that extensive team that they would have otherwise needed.
yeah, that's such an interesting point about project scale. Have you found that the size, the scale of the projects, it really limits the products and services that are available to some smaller companies, smaller folks like ECD?
Absolutely, 100%. So, I mean, I would say two ways that we see that. One is just the counterparties and the amount of due diligence engineering that those developers are able to secure. So there are lenders that it's not worth them talking to. There are engineering firm that it's not worth them talking to. There's O&M providers. A lot of folks have a target market size, and it's unfortunate that on the small end of the spectrum, you miss out on a large portion of the providers for those services, and you also miss out on a lot of the efficiencies for cost. So it's not just challenging to get people's attention, but it's challenging to get a good deal
Mm.
uh, when the scale is that small. I think this project portfolio we're talking about for ECD was 2.3 megawatts of power. So there were some parties they found they're interested, but it's not the same scale and the same expertise that you're bringing in as if you can hit the country's top two, three, four, five
Yeah.
most established providers. The other way it comes up is even on our side, the ability to provide insurance. And that's part of why we're so excited about GreenieRE. So we work with for-profit carriers, they're very large companies, and they do impose minimum deal sizes for us. Unfortunately, a lot of the companies that are set up to do small insurance deals, so your personal, your car policy, your home policy, these are not the carriers that or the teams that are set up to do renewable power. So it's a lot less. They tend to go for you need chunkier transactions to make sense because it's a very hands-on process. So that has limited the amount of availability of insurance for these small developers. They get much shorter lists of folks that they can place coverage with. And on the production side, for our own product, the solar revenue put, it creates some barriers via these minimum deal sizes that we face with our backing carriers. Uh, One way around that, and what we have is, as a very automated approach, we're data driven, and our underwriting process is data driven. That's the only way we make this work, and why we think it's something that can work in the long run. We have a very low cost per 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 doing business, and so we can handle these smaller transactions, and do large scale as well. And that's something a lot of carriers can't. So if we had a carrier such as GreenieRE, who was motivated, had a nonprofit community focus, mission driven, then we believe that they could come in and be a great option for these developers who either face a lack of options or simply can't get insurance at a rate that the rest of the market can achieve, but at a rate for their size that can make a deal work, just because they are exactly so constrained by those small development sizes.
Right. That's so true. And thank you for pointing out exactly what we're trying to do with GreenieRE. We want to take on those risks that the traditional insurance market hasn't been able to in order to facilitate renewable energy deployment. And whether that's because of poor credit in low income and disadvantaged communities, or small project size, like you mentioned, or just lenders concerned about electricity generation and equipment failures, GreenieRE will work with MGAs like kWh analytics, like energetic capital, to alleviate some of those risks so that our traditional insurance partners and lenders can be comfortable with backing these types of projects. So that's what we're excited to do. And Michael, thank you so much for joining us today. It was so interesting learning more about kWh analytics and what you guys are doing over there. We so look forward to working with you with GreenieRE. And if you would like to learn more about kWh analytics, please check out kwhanalytics.com. And of course, check out greeniere.org for more information about our nonprofit insurer for decarbonization. Thanks so much for watching, and have a great day.